Hi, my name is Mike Shellback. I own YIS Benefits, and today I'm going to explain the best way for you to insure yourself and your family. Now, I got my license back in 2009, and I opened my first agency in 2012, and ever since then, my goal has been to spread the word on not only the importance of health insurance, but also the importance of gap-filling products to help. God forbid you have to use your insurance. You see, having health insurance these days just isn't enough anymore. The average deductible on a bronze level plan can be over $7,000. The average deductible on a silver plan is typically over $5,000. To get a manageable deductible under $5,000, you typically have to purchase either a gold or a platinum plan. And I'm not sure if you've seen the prices. They cost a pretty penny. Now, let's remember the reason why we purchase insurance. A lot of people think that the reason you buy an insurance product is so you can see a doctor. And I want to just make sure you're well aware. The average doctor visit in the United States is under $100. Now, I don't know, that doesn't seem like it's going to break a bank, but God forbid if you find yourself in a hospital situation, that's when you can end up seeing massive bills. You can end up having to miss work and in turn really kill your financial situation. God forbid if you end up in a hospital. What they say is there's two major reasons why someone would end up in the hospital, either because of an accident or because of something more serious like a heart attack, a stroke, God forbid cancer. These are the types of medical situations that can cause tons of problems. They cause you to miss work, they cause credit issues, and they cause bankruptcy. Now, medical bills is the number one reason why people file bankruptcy. And last year, over 66% of all bankruptcies claimed that medical bills was a main contributor on why they filed bankruptcy. And most of these people had health insurance. What they didn't have was gap protection. They ended up with $5,000, $8,000, $10,000 worth of medical bills, and everything fell apart. And that leads me to my point, which is the proper way for you to insure yourself. And to get to the bottom of this, first of all, we have to discuss one thing: your current health situation. If you have medical conditions, then by far the easiest and best way for you to get a health insurance product would be through the marketplace. And the reason why is because you want to make sure that all of your pre-existing medical conditions are covered. The last thing that you need is for an insurance provider to come back, deny your medical claims, and say because of your medical conditions, we're not going to pay this $50,000 bill. Because unfortunately, if that was to happen to you, someone else is going to have to pay that bill, and it's usually you. Now, that's going to cause massive issues. So what I would recommend, again, if you have medical problems, I would recommend going through the marketplace, absolutely, with no doubt about it. If you do not have medical problems, typically, I recommend a short-term medical plan. Now, these plans last either 6 months up to 12 months. They do have up to 3-year options available. Now, those particular plans are underwritten. And what that does, because of the fact that they're underwritten and they can deny you for medical reasons, your premiums are typically a lot lower than what you would pay if you went through the marketplace. Now, let me explain. The numbers don't lie. Now, let me explain exactly what's going on, because I can tell there's a lot. But option A, I'm giving you two different options for the person who takes the gold plan and the person who takes the platinum plan. Again, what we're looking up is a 45-year-old male in my zip code here in Hollywood, Florida. Keep in mind, these prices are not subsidized. If you were to be getting a subsidy, these prices would be a lot lower. But I want to give you just an understanding of what insurance costs if you went this way, which in my opinion is the wrong way, versus if you went one of the two correct ways. Now, with a gold plan, you would have a deductible of $1,250 and an out-of-pocket maximum of $5,900. MOOP means out-of-pocket maximum. Maximum out-of-pocket is what it means. And basically, what that would cost would be $541 a month. Now, for the Platinum plan, it has a $1,000 deductible. It has a $3,500 max out-of-pocket, and that plan would cost $783 per month. Keep in mind, an out-of-pocket maximum is the most that you would spend in 1 year before your insurance company takes over and pays 100% of the covered expenses for the rest of the year. Right. So with both of these options, let me explain what would happen if you ended up using your insurance. Yes, if you had to see a doctor, you would have a copay of about $25. Great. But if you ended up in the hospital because you broke your foot and the bill was, I don't know, $25,000, even with one of these plans, you are still on the hook for your deductible and your portion of co-insurance. So if your bill is $25,000, with this plan, you're going to pay your out-of-pocket maximum. You're going to pay it. So now not only are you paying $541 a month, you just paid $5,900 because of your accident. Same thing applies to this plan. You still pay your $783 a month, but now because of your accident, you have to worry about your deductible. It gets expensive. Now, I want you to understand just how expensive we're talking. With the Gold plan, with just the premiums alone, you're talking $6,492. That's a year. That's a lot of money that you'd be paying into your premiums. The premiums for the Platinum plan come out to about $9,300 a year. And that's not, again, including your out-of-pocket maximum. That would be added on top of the premiums. Now, the right way to do it, option B. This is for someone who has medical problems that wouldn't qualify for a short-term or needs to make sure that their medical problems are covered by their insurance. They go with a Bronze plan. $5,500 deductible, $8,550 on the max out of pocket. That would run you $354 a month. Now what you do is you supplement a $10,000 accident plan, critical illness insurance. Let me explain what that does for you. In the event that you break your ankle and that same $25,000 bill would come up, you would have a $10,000 accident plan to pay off your entire out-of-pocket maximum. Now, all you would have to pay would be a deductible for your accident coverage, typically about $275, $300. And that's it. Everything else is covered by your insurance. On top of that, if you had a heart attack, stroke, got diagnosed with cancer, you would be able to receive a check, depending on the level of the program that you choose, anywhere between, say, $20,000, $50,000. That would end up running you about an additional $55 a month. In total, you're only talking $463 a month. It's less. But if something happens to you, you're covered more. See, it's the smart way to insure. It's not about spending more to spend more. It's about spending less, having an accident, and having something to cover it. It's amazing. Now, if you have no medical conditions, you can go even one step further. Go with a short-term plan. This particular plan, with a very big-named carrier, probably the biggest carrier in the nation, what you'd be looking at would be for $293 a month, you would have a $5,000 deductible, a $10,000 max out of pocket. Same accident comes up, same accident plan. Out of pocket maximum with that is $275. You're done. Accident plan pays your out of pocket maximum, and your insurance now covers 100% for the rest of the year for anything that's medically necessary, as far as your medical bills. Now, as far as critical illness would apply, same thing applies. You would be able to still purchase the same critical illness plan. So now you're looking at a total of $402 a month. Call it $403. It's about $60 difference. It's about a $720 yearly difference if you're healthy versus if you're not healthy. And on top of that, if something was to happen, you have real coverage. It's going to help. Now, this is my personal opinion. You might think differently, but I can assure you, I have definitely insured hundreds of people just like this. I've gotten a phone call thanking me for my service, thanking me for explaining this because they had no idea that doing something like this was even possible. Now, if you have any questions, let me know. I'm always available. I keep my schedule open 7 days a week. And if you have any problems, any questions, concerns, by all means, reach out. Thank you again for your time, and have a great day.